So guys, we're concluding 2021 and it looks things are good. 30% up the S&P, house prices up 20%, unemployment 4.5% in America. Things are looking pretty good, but they're not really. The reason why the S&P has gone up so much is due to 50% of that increase is 5 stocks. I call it Matan, which is Microsoft, Apple, Tesla, Alphabet, which is Google, and Nvidia. If we add on as well Facebook, Netflix, and other two or three tech companies, we're going to get to 65% of all that increase is due to those companies. All the rest are either lower or in bear market territory, meaning very, very bad. All the bubbles that we've had, the Bitcoin, the SPACs, the meme stocks, they are treading water, which means they're just waiting to just crash. They're already way off their peaks and they're about to crash. And the reason is, while there's been lots of free money, the Fed is tapering, which means the Fed is still buying, but it is tapering. And when that money spigot comes out in March, I mean, all hell's going to break loose. Another reason is those 5 companies were basically supported by the Fed. What did the Fed do? The Fed bought all of those companies' bonds, which means they issue debt. I mean, imagine Apple, it generates like $100 billion in profit a year, somehow needs to issue debt. Don't ask me. They issue debt, the Fed buys it, gives them the free money, and then they use that debt to perform share buybacks to increase the market. And again, as we've said before, 60% of all buying in the market this year has been share buybacks. It's not retail, it's not hedge funds, it's not institutions, it's share buybacks. And that's why these 5 are so strong, because the government is buying their bonds, who then they use to rebuy their shares. So it doesn't matter if they're making no money. Let's take an example, the airlines. How the airlines survived 2 years of no business. So obviously there's been a few federal programs here and there, but generally what's happened is the Fed is buying their bonds, right? They're issuing debt, and all the governments, and this is not just the Fed, in every country, their national airline, those governments are buying their bonds, right? So then they get money from debt, and then they buy their own shares to increase their share price, so the thing doesn't crash, because obviously no one would buy those shares. Looking at the real economy, UK car production was 1.6 million in 2012. On the eve of Corona 2019, it was already down to 1.2 million, and it is now at the lowest in 40 years at 800,000. This is nothing to do with a chip shortage. It's a load of rubbish. All this supply chain nonsense is a load of rubbish. There's no chip shortage. I mean, there is a chip shortage, but that's not the reason why it's down so much. There's no demand for cars. The baby boom generation is retiring. They don't need cars so much. That means there's obviously less people, labour participation rate is much smaller, so there's less car demand, and so therefore there's less cars needed on the road, and people are working from home more. The car industry is massive, employs a lot of people. There just isn't that demand there. Put on the tourism industry, the airline industry, all these, the restaurant industry down 65% in Europe due to the Omicron strain. 60% for businesses that have been battered for 2 years. Retail sales also massively down from 2019. Right? They're going to keep telling you figures. Oh, retail sales are up 10% from 2020. We don't care about a year where the whole world is in lockdown. Look at 2019. They're down. We have ominous signs that things are going to be very difficult in Q1. But then when the taper actually ends in in March, we're talking a Q2 of disastrous proportions. And so I predict, sadly, a big crash in 22. And I think the Fed will have to reverse course, or the government will have to do some helicopter money or something like that.